Hi, everyone. Welcome to episode 2 of the IKV Podcast. We have the founder of 3DOS, John, here to tell us all about the origin story of 3DOS and how he came up with this concept and the journey and the next steps of where it's headed. Hey, John, thanks for joining.
Joseph, thanks for having me. Looking forward to speaking with you and your audience. Thank you so much.
We're excited to have you here. It's been a long road since the depths of the crypto bear market in 2022 when we joined forces. Yeah, would love to just start with a little background on you, John, and the origin story of 3DOS, and we'll start there.
It always starts with a problem that you're struggling yourself. So for me, for a few decades now, I've been building gadgets, computer coding, electronics, and I always found it a very high latency process to go from a design to have something manufactured. My background is electrical engineering, computer science from UT Austin. Helped create the first company, Austin Digital, which is taking data from airlines, digesting it. Before that, I was building my own home computers, modifying them, and I just always found it a struggle to get physical things manufactured. And when I was at Dell, I looked at the manufacturing process, the automation, how we were able to build things at scale. I always wished at home I had a way to click a button and get some physical item, like even something simple as this iPhone case. Almost 20 years ago, the desktop 3D printers started to come out, and they looked like initial wooden Apple computers. I was like, wow, I can upload a design to this machine on an SD card and get it printed. So my vision was how do we reduce the latency between design and manufacturing, global distribution? So 10 years ago, we created an operating system called 3D Printer OS. 3D Printer OS is used by the top universities, MIT, Harvard, Yale, Purdue, Caltech, the best and bright minds. It's used by Google, John Deere, NASA, where they have clusters of printers, they have thousands of users inside these internal networks. And so we're able to have anyone inside the office upload a design and have it printed instantly in real time. And so that was kind of the trajectory, right? I always struggled with getting things made. I went to computer science for a long time because you can push to production with the click of a button. And I wanted to do that for the digital to physical world. So about 10 years ago, yeah, we created 3D Printer OS. It's #1 for 3D printing operating system, if you Google that, for 3D printer management. But the real vision was, how do we decentralize manufacturing? How do we, now you've made this once, now how do I upload this design and have it made all over the world? And whether it's one of these or a million of these, they can be made, transcontinental, bypass shipping, bypass customs, right? So that's kind of the origin story and my trajectory, and very excited to move forward, especially utilizing the power of blockchain, the ability to have smart contracts that do a lot of this coordination layer, which take lots of human resources. And most of these companies that have machines like this or networks, they have thousands of employees coordinating those transactions. So that's kind of the origin story. We want to go reduce the latency from design and manufacturing to global distributions, and that's 3DOS.
You had the high level idea or concept for a long time before the market was even ready for this type of implementation. And I think it seems like 3DOS is essentially a category killer because you don't see many startups building in that space. So I'm curious around at what point did you say, hey, I'm going to go for this with 3DOS? And because it sounds like it was an annoying itch of an idea for a long time. And then it didn't really manifest until maybe 2019, 2020. So now I'm just curious around the details of that progression from idea to saying, okay, we think this is ready. And so I'm curious around, when you really got started and given that, you already built a company in the 3D printer space. So I'm curious around those details.
Yeah, so I started studying blockchain companies and looking at overall the market, and there's a lot of successes and mistakes and follies that have happened. But what I was very impressed with was just USDC or even USDT, the ability to send money, right, instantly without any middleman. So when you send money through a bank, hundreds of thousands, if not, millions of employees worldwide, middlemaning these transactions. I really don't know what people do inside banks, but then you've got a smart contract like USDC, and I'm able to send that money securely anywhere in the world at the speed of light. I was blown away by that. Then I started seeing these deepen projects, which were before deepen. When I started, it wasn't called deepen. It was just a new concept, and the helium started, and they were like, okay, how do we create the world's largest Wi-Fi, now 5G network? And the idea is you have all these people that have ability to put these routers in their house. And I was like, that's interesting. I'm starting to see now it's going from digital to physical world, right? And then like Hive Mapper is mapping all the streets like Google Maps. Now, Google Maps spends billions of dollars with their own car, with their own capital expenditures, their own human resources. But then they've got the shared economy with Hive Mapper, and I think they've mapped more than Google has in a shorter period of time, and they only raised $8.5 million. So this ability to like coordinate capacity of humans and resources worldwide and give them equity to build the network, I thought was kind of an eye-opener. And I said, this is amazing because when I do my private deployments, it's a SaaS solution. There's some humans, admins coordinating those transactions, right? And so when I started seeing the power of DeepIn or decentralized physical infrastructure networks, I was like, wow, this is the next big thing. So first was, sending money or real transactions like USDC. The ability to send money reliably kind of proved the first part, that you can send money. The second part is how to reward people for doing real work, right? So these, what I call these poop coins, that's not real work. That's just kind of like gambling, right? But still, with gambling, you still have to be able to secure money transactions. So when I started looking at this DeepIn, I said, this is what I've been waiting for. We've got a $15.6 trillion market. 100 billion is just 3D printers alone. There's about 2 million printers made per year today, and there'll be 22 million made per year by 2030. So the market's going up. But more than that, manufacturing, there's all this capacity around the world, all these things that make things. And these people struggle, machines like that are behind me, they struggle to broadcast capacity. So how do they broadcast capacity? They have to go to Google Ads, and they have salespeople. They buy, $24 million of machines. They have a client. They're hot one month. They're dead the next month. So I said, look, manufacturing is the core of actually monetary. If you don't make stuff in the world, there's no stuff. There's no dollars, right? If people stop making stuff in the world, the whole economy ceases. You can't even have Facebook, right? Facebook requires cables, computers, all these things that, even the tools to go dig holes in the ground, satellites. So I said, okay, let's coordinate all this manufacturing capacity, starting with 3D printing, since I had that in my back pocket, and let's build a 3D operating system, which is going to be the world's largest decentralized manufacturing network, connecting supply and demand and rewarding everyone on that network for good behavior, right? And this is incentivizing people that are acting in a non-productive way, right? We want to reward the productive people in society, the people that actually make the world go round. So this is kind of the trajectory, and I think this is where the market's going, right? We're able to send money. Now, how do we coordinate all these supply and demand of human resources, of technology resources, in a way that is self-governed? So this is what I'm very excited about, and this is why we're building 3DOS.
It makes sense. And I think the core of what you're hitting at is that it's more efficient to build networks in this way. I use the example of Verizon, where they spend a bunch of fixed cost on building towers to bootstrap a network, and there's a bunch of upfront costs and capital expenditures to go build that network. But we're essentially talking about flipping that on its head and creating the incentives to make those networks able to be bootstrapped. I'm curious around, how is this more efficient than Web 2 companies? You mentioned Hive Mapper and Google. I'm curious on your take around how DePIN makes bootstrapping networks possible with less
Yeah,
resources.
yeah,
Yeah.
I think it comes back to some fundamental thing. Like we look at company efficiencies, right? So Telegram with 30 employees are able to do what other companies with thousands, if not hundreds of thousands of employees are able to do. Efficiency. You can't manage what you can't measure. And what's amazing about the smart contract is it's automatically inherently programmed to route traffic to the high performing nodes. And the nodes can be people, resources, like Bitcoin mining. It's gonna go to the miners that have the most compute power. And so you basically are able to embed that into a smart contract. So the classical Web 2.0 is I hire 50,000 people, inefficiencies skyrocket. You can't manage what each of those people are doing, like a bank, right? Like, why does it take a few days to send a wire? Why do people have to double check, right? What are they doing all day? Like, are they massaging the money? Like, what are all these people doing, right? They're taking cuts. They're taking cuts after cut after cut. And, they're using like old mainframe type systems. Where's the master data residing? Like, it's very inefficient, right? It's a lot of overhead. An example of Hive Map or Google spending huge amount of money, driving its own cars, its own people, right, um, around the world, when you already have people driving anyway, right? You have people driving anyway, so might as well just capture that data, right? So like the power of empowering people to join the network and rewarding them for the collective goal, and people that don't provide value to the collective goal don't get rewards. It's amazing, right? That's very hyper efficient. If you decide not to do work one day for the network, whatever that is, or your work is less valued, then you get paid less. In a company, you can't do that. Once you hire a person, they're stuck. They're anchored in, especially the executives, right? They got parachutes. You're going to spend a lot of money just to fire the people, right? And this is a very pure, performance-driven way. There's none of this DEI stuff. There's none of this it's just you perform or you don't perform. We don't care who you are, what you are. You perform as a collective the goal, you get rewards. So I think that it's deadly efficient compared to the Web 2 model. I'll give you something in the manufacturing space. So, Protolabs Exometry, also, 1,000 employees, publicly traded, $500 million. They middleman all these transactions. You upload a part, thousands of employees working there. Even a startup was at work, raised $680 million. It's just a web form. They have like 1,600 employees as a startup, middleman in these transactions. So I think that's the beauty of Web3. If you can measure and manage all of those performance metrics in a smart contract, the thing's a self-governance, right? You got to get that right, though. It's very important to get that right. And I've seen I would say over 99% of the crypto projects haven't gotten that right. And so you have this huge rise and crash, and some of these things don't bounce back because you have to be able to accrue value into the network. You can't just have supply and no demand. So I think that's the power of Web3, the collective. I mean, imagine every time you bought and sold on Amazon, you got a piece of the company, right? Imagine a payment system like PayPal. Elon put in $750 million to acquire clients, the cost of acquisition. Peter Thiel put $750 million. Combined, they put $1.5 billion of real money in to get the flywheel going before PayPal became a huge success. Robinhood, $10 of free Apple stock or something they were giving out to get people to come into the network. But if you have a flywheel that everyone, not just stockholders and billionaires, share, look at stockholder billionaires. They don't do anything. They just have a lot of money. They invest in a company like Warren Buffett, and they kick back. But they didn't really help create those companies. They didn't help provide value other than liquidity, right? So Web3 really changed that. And I think it's a more pure model if you can get it right.
It's been tough trying to align users to shareholders. And I think the only real example that I see at scale is actually just going back to the beginning of crypto is BNB and Binance. There's a lot to be said about what has shaken out in the last year or so. I think they got BNB right before really DeFi existed, and just incentivizing people to hold their tokens on the Binance exchange and even cannibalizing their centralized exchange with a decentralized exchange. An example in DeFi, similar to the Helium being the first mover in DePIN. But yeah, I think it's interesting to see crypto evolve over the last almost decade now, and I'm curious to kind of get your thoughts on where the crypto market is now and how it's evolved and where you think we're headed.
Yeah, I'm pleasantly surprised by the market. I think initially the fact that you can send money, right, even Bitcoin or hold value in something that's decentralized, right, like Bitcoin, right? So even a lot of these things I didn't really believe in. As an engineer, I like to see things being stress tested, right? Thoroughly stress tested before I can say that's a reliable mechanism that I can use inside a part of an airplane, right? Like that's how I think. So for me, seeing Bitcoin turn into something that's, well tested and, hasn't failed is amazing, right? And then USDC did give me a lot of fear when Silicon Valley Bank, which we had actually also a lot of money in as part of one of my startups, when that failed, it depegged to 90 cents to the dollar, which has scared me. So it's even USDC is still sitting on top of dollars, right? And so if you go below what holds up dollars, then it's product, service, and goods. That's what makes up the world economy. And so where I think we're going now is now that we know we can send money, we can store money or value, it's connecting real product, service, and goods to tokens that can't be manipulated. Even the stock market's manipulated, right? Wall Street. Why is the guy trading corn making more than the guy making corn? They need to trade and short and corn prices go up and down. I think all that can be in a smart contract someday. I think the system can figure out where to route and find price discovery based on the demand. And you don't need these middle guys, messing with the market, taking huge chunks out, right? Like that can be what the network fees are. So I think we're moving into a trajectory where, we're able to store wealth, we're able to transfer wealth at the speed of light. And now we're able to bypass the dollar and fiat currencies with ability to store people's product, service, and goods, their value, what their values are. So I think and we're seeing that in kind of the deep in space. So very similar trajectory to Web 2, started with money transactions, then selling product, service, and goods. So I think we're moving into that stage. So it's not just a monkey picture NFT that's value is based on who traded it up higher last. This is a physical item. There's a cost to make this. It's grounded. And so you have even NFTs, if it's backed with a real product, service, or good, that's stable, right? It's not speculative. So I think we're going into speculative to least speculative types of technology, which store the wealth of those that are productive in society. And I think that's an exciting time. And DeepIn is, I think, just the beginning of that.
Yeah, I agree. And it still feels like we're so early in crypto because the people that take shortcuts have been the ones to actually make a lot of money in crypto. But that shouldn't be the case, right? And as the market smartens up, that won't be the case, right? So the people that are building lasting technologies and are in it for the long haul should benefit. But we just have, just taken a long time, over 5 years to just shake out some of the bad actors or some of the people who are just sacrificing long-term sustainable systems for short-term profits. And like, I think those days are numbered, and hopefully we've seen the last of it with the meme coins on Solana. And I think like that's where it starts to become, what can you do in the real world with Web3 solutions? And hopefully, like, 3DOS is the beginning of, a larger trend over time in crypto, where, we're actually trying to impact real economic activity rather than just moving money from one pocket to the next and taking fees for that, being the middleman.
We're seeing that now. Like what's interesting. So I went to the Deepen Summit by Escape Velocity. The VCs are now looking at ARR, which they were never looking at before. So they're looking at projects like GeoNet. They even HiveMapper's producing revenue. They're looking at ARR because they're looking for something long term, right? They want to bet on the next Amazon. And I think it's totally fine. All the meme coins, those are like stress testing the system. I mean, .com, we had the same thing, .cats, .dogs, .rabbits. So you go through these even AI companies now, there's so many AI companies, and a lot of them will filter out. But yeah, I think we're going through this maturing phase. I think it's a natural cycle. But even those junk projects still tested the system, right? People learn, people get burned. That's how you learn, how you get better, making mistakes. But I think now we're going to this next phase where it's real world value, right? And that's measurable, right? And I think that's going to be exciting new chapter. And I'm seeing a lot of venture capitalists look at that, they're asking tough questions. Where's the supply? Where's the demand? How does the revenue accrue into the token value? And those are questions that they never asked just last year or 2 years ago.
I think fair to say that the market is institutionalizing itself, which brings good and bad. But I think what we're laying out is the positives to that, and I think it needs to happen. And if in order for any of this technology to really make a dent in reducing the inefficiency in the traditional economy.
I just want to correct myself. It was broadcast.com, the Mark Cuban, right? So he also was able to sell. So I think there's these hype cycles. I mean, there's even AI companies that are exiting and they're not even fully there. But yeah, I think we see these hype cycles. It's just part of growing up.
Let's talk about the fundraising journey. How much 3DOS raised, when you started, and I think 2022, but correct me if I'm wrong. Just tell us about that journey, how you've been able to pull in the capital over the years. That'd be fascinating for the listeners.
Started a couple of years ago. We started closing checks a few weeks before the market fell off the cliff, right? So we were raising on the way down, which is not easy. And so luckily had some really good investors. One of them was one of the early founders of the Stanford Blockchain Foundation. They cut like a $250K check, which is a pretty big check. And then it was IoTex, which was doing some interesting things. Now they're a leading Deepen project. We started raising with some angels as well right when the market started tanking, right? And no one knew what Deepen was. There was no Deepen category. Everyone was into meme coins, Shiba Inu. So people were just gambling on all these different things. Then it fell off a cliff, right? FTX and everything. And I always, think persistence on your vision is very important, and always be raising, always be closing, no matter what the market is. Even if you're not raising, you always try to raise, and that helps you refine your pitch. So when the market was really down, the economy was down, we kind of exhausted all crypto. All crypto, just basically all bets were off. Zero money was coming in from crypto investments. We moved to crowdfunding, which was also a tough time. Went to crowdfunding, and they pitched us crowdfunding as it's easy. Just we've got millions of users. Put your product online. That was very, very tough, to be honest, in a bear market, not just for crypto, but for all investments. I mean, everything was risk off. The value I gained from that is it was extremely tough. It helped me refine the pitch. We spent money on making a video, explaining the product, and it forced me to describe the product, decentralized manufacturing network, 3D print network, in a way that the masses could understand. And, we had to register with the SEC. We had to do all these different things. I also learned about marketing and Facebook marketing. So I got into the platform. We quickly raised I don't know, 50K to 100K, which wasn't much. And then it just stalled. And then I started talking to other people and say, you need to use Facebook marketing, Google ads. I'm like, wow, there's a cost with that. Hired a marketing agency. And then I realized all the money that we're spending to close from, the campaign was all going to the marketing people. The marketing people were like just vacuum cleaning all the margins, including Facebook. And we were running it super efficient. I thought. I talked to other founders and they were like, for every $2 they put out, they were getting $1 back. They're losing 50%. I'm like, what's the point of this crowdfunding then if you're losing money? And then I went deep into marketing. I fired the marketing firm. I learned marketing. I got a tutor, gentleman from Egypt, from Fiverr, $35 for half an hour. He taught me Facebook ads. And then I was able to start converting every dollar I put out to making $2, right? And this was in the bear market, right? This is in the bear market, marketing, still emailing VCs, putting them on the list, email blast, super struggle, like completely outside my comfort zone, and have to master a skill that I don't have. And that's part of entrepreneurship, right? Like as a CEO founder, you got to be able to do whatever it takes. You need to learn, jack of all trades. You need to figure out all these components. No one's going to help you. You can, and people say marketing. Marketing is usually a vacuum cleaner, right? You pay some marketing agency, and we kind of how they work is a monthly fee of $3,500 to $5,500. They're going to also spend all your money on Google, Facebook ads. And on top of that, they're going to take another 20% of ad spend. And if they mess it up, they still make money, right? So that was I was grinding my teeth. And I was so happy to can those guys as soon as possible and get control of the cost. Now I can market Facebook really well, which is a skill that you need, right? So so while we're grinding on that, market still doesn't know what Deepin is. People are laughing at non-meme coin projects, basically, right? Everyone's saying you got to do a meme coin. I was trading all kinds of meme coins too, just learning about the market, what people are interested in. And then we got the tension. So coming up a year and a half, 2 years after that, Mahesh with Escape Velocity contacted. He's like, I want to invest, John, and you're coming to speak at our Deepin event at Stanford. I go, what's Deepin? I'm deep into this stuff. What is Deepin? And I think he meant like I was deep in. I was like, yeah, I'm really deep into this stuff. And so it was, I was sitting next to Helium. I was sitting next to, I think, Demo and Nosh, which are now pretty big deep in projects. They're, Nosh, the revenue generating. And I was on the panel. And so Mahesh with Escape Velocity, because he had been getting my crowdfunding emails, the updates and the milestones, right? So as an entrepreneur, it's very important to keep moving your feet. When people tell you, oh, well, there's no one's raising now, you don't quit. When one door closes, you check every other door, right? You got to just be resourceful, right? You got to be resourceful. You got to be open to trying new things. And so that's then started to snowball. So then we got Mahesh, we have this investor, that investor, and after that we raised $8.2 million, $8.2 million, and the market started to sell. Solana went from $20. Some of these Deepin projects I was sitting next to went from 1 penny to 10 cents to 20 cents, 20x. In New York, when I went there, I'm walking and people are like, oh, you guys are legends now. Like, wow. People know about 3DOS. You have to just keep plugging away. That's been our journey, and always be closing, right? Whether it's investors, customers, always keep trying and sharpening that skill.
In summary, the best resource is being resourceful. If you don't have the cash or don't want to spend the cash, then you must have the skills. Couldn't agree more. I think the crowdfunding side is interesting because, after IronKey wrote you guys the check, I went out to a bunch of other syndicates, both inside and outside of crypto, and I would sell them, try and pitch them on 3DOS, and they would say, like, why are they doing crowdfunding? Like, that's usually a bad sign. And I would say, well, you know what? It's a red herring. The crypto market's dead right now. It's 2022, but this is a real solution, right? Like, this is a real solution to a problem, and it still didn't work, right? Because everyone was, no one wanted to invest in crypto, especially the non-crypto people. From a VC perspective, you might, from the outside looking in, you see a startup launching a crowdfund, and then you kind of think, Why?
Well, it's kind of the sheep mentality, right? I mean, if you look at any good founders, I mean, I've got some wild stories from random investors where they're down to their 10K check, or I think it's FedEx. They took the last 10K check, they went to Las Vegas and they 10, 20x and saved the company, right? I know many stories like that. I know hyper successful crowdfunded companies now that are worth billions of dollars, like a 3D printing company, Formlabs, right? There's lots of these stories. So you can't just, you have to listen to your own intuition, right? If crowdfunding is not working, switch it out. If it's something's not working, switch it out. There's no harm in A/B testing. I would avoid the noise. Yeah, if something's going wrong. Now, VCs, when they see everybody else investing, that's how we ramped up really quick, right? They're also looking to follow on to what everyone else is doing. So there is some truth in everything everyone says, but I wouldn't just say like this is bad, that is bad. I mean, I think like Boxable makes these homes. They've raised like hundreds of millions of dollars from crowdfunding, right? So there's different ways to raise capital. I don't think there's any perfect way. I mean, a lot of my start, I mean, I put the money in myself, raised from family and friends. Sometimes I never raised, I just worked on a product. So there's no like right or wrong way. You have to adapt, shift, keep moving forward. That's what people remember you for. That's all that matters.
There's value in, A/B testing and trying new things and learning and iterating. But, it seems like it all happened pretty fast. It seemed, at least from the outside in, it seemed like, if you're just willing, like you said, be persistent with the vision, you can change implementation and the strategy around how you're going about it, but you're being persistent with the original vision. And then eventually people will catch on, right? And that seems to be what happened. It seems like you pulled in a lot of capital pretty quickly.
You have to be pragmatic and focused on your vision, right? And you got to go all the way. Know that you've tried every single door, right? I mean, how many entrepreneurs maxed out look at the founders of Loom, right? They were completely broke. They had raised a few hundred K, maxed out their credit cards, and literally days before dying, they started making revenue, right? And then it started to go up, and then every VC wanted to pile into that, right? So it's interesting when you have a lot of pressure on you and limited resources. That's when really good things happen. And so I think it's part of a natural thing, because if you don't have a fire under your chair, everyone gives you a boatload of cash. Usually those startups fail. They're too comfortable. They have too many resources. They're not focused. They're very bloated. Survival of the fittest. It's startup, right? Like one in 10,000 actually make it. If you look at the total numbers, maybe it's less if you look, coming out of Y Combinator or Alchemist Disorder like we did, but the odds are against you. So keep trying. That's my recommendation. Keep trying. Feel your way to success.
Yeah, I can resonate that with that a lot, but I think as a human, you're a different person if you just kind of have to make it work, or at least you set your environment to where it feels that way, right? Or you create your own video game for yourself. If there's a backup plan, then when things get tough, you're just going to take the backup plan. But so it's this concept of burn the boats, right? Like, for example, I burned my resume. Like I'm not applying to another job again. I'm just going to build something, right? Something will work, right? So, it's this burn the boats philosophy. I think burn the boats was, there was an old, war general, and just said he would land on shore of his opponent and then burn the boat so that there is no plan B, right? It's just plan A. So I think that's like important, whether it's like real or not, but I think that, is a whole different ballpark of motivation.
Yeah, I mean, Arnold Schwarzenegger says the same thing, right? Don't have a plan B, have a plan A, and that's it. Where the mind goes, the focus goes. So if you start focusing on plan B, C, D, E, F, your mind goes that way. If you focus on plan A, we're going to Mars, we're going to Mars, we're going to Mars, but we're going to get to the moon first. Then we're going to get between moon and Mars. Then it's amazing what humans can accomplish when you're really focused, right? And so, yeah, a plan B, plan C isn't a good thing. It's okay to experiment with a bunch of things, but You've got a vision, you've got a focus. You're going to go all out, and you're going to learn right away. Like even with this platform, you know, we're not waiting years to find out do people want it. You know, we created a ton of web forms, indexed for every city and state in the U.S. That is about 50,000 population. I'm getting orders every day. Like today, we got an order from Swatch, right? Even semi-manual, I'm seeing that people want the product. There is some, it's not zero, right? Now, we're going to find out how big that market is, how many people will choose us over the thousands of competitors globally, right? Plan A, jump out of the plane with a parachute, materials. You got to build the parachute on the way down before you hit the ground. You'll figure it out. But if there's no sense of urgency and timing, and you don't feel like you're going to do or die, you may never get there. And I see a lot of startups feel like that. They burn the cash. They keep getting more investment. It's like a cancer. It just keeps growing.
I mean, investment capital is just hard to come by. Like, there needs to be revenue. I mean, like Amazon is a terrible example because Amazon was able to grow without ever turning a profit for a long time, but that's not the case with most companies.
But they had revenue, right? People are still buying products. People are still buying products. That's fine. If you're just even breaking even, or if you're minus, that's fine. But I can see that the revenues are scaling, right? You can see people want this thing. They want more of this thing. They're willing to pay for it, which is the key thing. They're willing to pay for it. And so, you know, I don't know if Amazon's even still profitable because they burn as much money as they make, but that's fine. You're validating there's demand and you've got the supply.
The takeaway is that, top line revenue matters because revenue is the one thing that's very difficult to control as a founder. So if you can get a handle on that, you can fill in pieces around it.
For better or worse, money is the one thing we all agree globally, the one measurable thing that we agree on that stores the value of exchange, right? It's like you have something I need and I'm gonna provide it to you. And the money is a way we both validate that it's something of value, right? If no one's willing to pay for it, I mean, Gmail, I use it for free for a long time, but now I can't live without it. I have Google Business, all their services. It's invaluable, right?
Your Arnold Schwarzenegger quote, I was reading it. I was reading the back, just the cliff notes of his book, and he just says, hard work works 100% of the time, but most people aren't willing to put in the hard work.
Hard work that's measurable. I mean, it's also bad to like keep going in one direction and not seeing any success, right? I mean, I can go run inside my garage and get nowhere, right? I always have this formula: work equals force times distance. So work equals force. If I put a lot of force in and get no distance, I've essentially done no work. So the idea, kind of like golf, is how do I put the least energy in and get the maximum distance? And so you start initially with a lot of force. You're working, and the measurable part is distance, the dollars. Did I get anything? Nothing. And then you start to become efficient. You start to see these graphs go where now you're doing less work. It's like a lever, and you're getting more distance, right? And now you're almost doing nothing and you're getting maximum distance, and the work value is higher. So it's important not to be delusional because there's a lot of startup people that 10, 20 years, they've got some projects supposedly in the garage. And I'm like, no one's buying this stuff. Like, you have to understand when people don't want to give you money for it and you've tried, and you need a new plan A. You need maybe a few plan A's and A/B test those. And then once you find one that bites, then you start putting your full resource in there.
Tell us about 3DOT's next steps, where you are with testnet, and what's coming next in the pipeline.
Yeah, so we've partnered with Sui, which is an amazing team, Instant Labs. They're here close by in Palo Alto. We have like 500,000 users, 75,000 printers, 15 million CAD files from 3D ProMS network, of which mostly are centralized networks. So we're bringing those on board. on-chain onto the Sui network, which has something called ZK login, which is really important for us because with one click, any user with a Gmail account and pretty soon other email accounts can create a wallet instantaneously. And we think the next billion users need not to know how to create wallets and keep all its passwords. It's got to be as easy as email. It should be transparent. So we've put on about 10,000 users onto the testnet, Sui network testnet. We've done like 15 million NFTs, about 10,000 or 15,000 printers or 10,000 printers. I got to check the numbers, but we started moving that to testnet. And in a week or two, we're going to move to mainnet on the Sui network. And it'll be with Gmail login. And then a month or two, we'll have our own identity server, which means any email can register. We're adding payment rails on and off ramps so that over 120 countries, people that want to order parts can just use their local currency and credit cards. And we're adding a lot of those quoting technologies. And we're testing our algorithms. So one thing I think is very important for crypto projects, and you see a lot of companies using these point system or reward systems, you're testing your algorithms. Does my formula that's going to go in a smart contract ultimately for on time to quality work? Does time to order, time to fulfillment, high performing nodes or manufacturers, is a ratings correct? Are we rewarding the right people? If I reward people just to create the network and I don't have the right demand or supply, these things get out of balance. And then we see a lot of projects that later on have a coin that goes like this and crashes, or they have to use other wallets to top off certain dead zones where they want to reward people that are not, like for example, mapping. They want to reward people in areas that they don't have the maps for, and the people that keep driving the same route and they have the maps for, maybe they reward less. So it's important to run all those algorithms because ultimately you need to test that and make sure that the dynamics are healthy to get to the end goal. And then we're going to bake that into a smart contract and launch the fully decentralized self-governed version. So we're on our way there. We'll start with 3D printing, but then the ultimate goal is 3D OS, which is a 3D operating system. We'll move into CNC, water jet, all this manufacturing capacity. But the idea is any type of supply and demand, ultimately, where resources are at idle capacity, human and machines can ride on the network.
Thanks for coming on, John. This is a fantastic conversation. I'm looking forward to seeing what comes next as you guys launched mainnet. We'll have to touch base again in some time once we have some data to look back on.
Thank you for having it. Excited for the future.